What is up, you guys? Pete DiCarlo here, and today is Tuesday, 4/20. You guys know what day it is. However, Netflix is also having earnings today, and they just posted their earnings report. And the stock is currently down pretty hefty right now. We're trading right around close at $550. Actually hit a low of $480 before bouncing, which was down 12.5%. Right now, we are still down 10%. We're going to go over the numbers. We're going to go over why it fell. We're going to go over where do I see this thing going in the next couple of weeks. Tons of big tech earnings coming up. We have Apple coming up next week. We have Amazon, Facebook. I'm in a couple of companies that are going to have earnings this week, like Snapchat. So I'm going to be making a ton of videos based around earnings over the next couple of weeks. So if you guys have any questions about earnings, how I trade them, would I trade them, anything, comment down below and we'll talk about them in another video. But taking a look at Netflix, like I said, is down pretty significantly. And the headline that we're going to be reading is Netflix reports a dramatic slowdown in subscribers. Now, the main thing that you have to realize when it comes to streaming services is that subscribers is huge. It's kind of like with social media and gaming companies with daily active users. That's what really drives kind of the movement within the stock. It's the same thing with streaming services as far as subscribers and how many subscribers can they actually grow every single month and every single year. Because if you look at something like Netflix, they have a huge span within North America. What you have to think about to yourself is how much further could they really go as far as their North American market? How many more people could sign up for Netflix? I mean, at this point, how do you not have Netflix, or how do you not know somebody directly who has Netflix that you use their account, even though that's not right? So it's really hard for them to grow in North America. So they have to look more towards the outside world, in Asia, in Europe, and other parts of the country. But let's get into these numbers. So Netflix shares have fallen about 11% in after hours trading after reporting a large miss in subscriber numbers in the first quarter earnings report. So back to the subscribers thing that we spoke about before. Of a lot of students, a lot of people reaching out to me like, Pete, they beat on the top line. EPS was much higher than what they expected. And on the bottom line, which we're going to talk about in revenue, they just barely missed by about $9 million. Why is the stock cratering like this? And it's because that subscriber number. Now, the company's revenue still grew 24% year over year and was in line with its beginning quarter of its next forecast for next quarter. So that's good, right? Forecasting for the next quarter seems pretty good, and 24% year over year growth with a company this massive is still insane. But like I said before, it's all about the subscriber numbers. The PE ratio of this company is astronomically ridiculous. We're going to talk about that in a little bit, but it's the subscriber number. The way that a company can grow, right, is either by raising the price or by getting new subscribers. Let's take my business, the Capitalist Academy. I'm actually giving away the first month 100% for free. Shameless plug here, guys. But if you guys want to get access to every single trade that I take live, as soon as I take it, live stream with me and my team every single morning for the first hour of market open, get access to every single trade, and get access to our Discord, use the link below, use a code, free trial, you start 100% for free. But it's kind of the same thing with my business. I'm a subscriber business. So the two ways that my business can make money is either by getting more people to sign up, like you guys should, it's 100% free for the first month, or by raising the prices on the people who are already subscribed. And we've seen over the past decade how much Netflix has risen the price for their subscriber service. But still, it's about those subscriber numbers and getting more each and every quarter. And even though they did a good job, it just didn't hit analyst expectations. So it also delivered a strong beat on earnings compared to the Wall Street estimates. So let's get into the nitty gritty. Let's get into the actual numbers. So here are the key numbers. EPS, or earnings per share. This means how much a stock has earned per the price of the share. Sounds very simple. A lot of people don't understand. If a company has a 0 EPS, that means the company is not profitable. Now, for Netflix, EPS came in at $3.75 versus the expectation of $2.95, which is great. If you look at revenue, 7.16 billion. Okay, so they actually beat 7.16 billion versus 7.13 billion. So they beat on the top line, which is EPS, and bottom line, which is revenue. Global paid net subscribers additions, which means that this is how many they added within the first quarter, was 3.98 million versus the 6 million expected. So they missed by like 40% on that number. And like I said before, that is a key number. That number is extremely important. And not only did they just barely miss it, they missed by a ton. They missed by like 2.2 million subscribers, which is insane. So Netflix said in its shareholder letter that we believe paid membership growth slowed during the big Rona, I can't say that, pull forward in 2020 and a lighter content slate in the first half of this year due to the Rovid production delays. So if you look at Roni, and you look at, subscriber growth last year, yeah, a ton of people have been inside. And so the growth is going to slow because the world is opening back up. More people are outside, less people are inside watching Netflix. The other thing is that these streaming service companies, Netflix in specific, are not putting out as much content right now, right? You've probably seen this more specifically with Disney Plus, and when Disney has earnings, that's going to be another thing. They're just not putting out as much content. They had to shut down for at least 6 months in California, where most of these shows are shot. They had to shut down for nearly 6 months of all production of content in general. So it means that they're not going to be able to continue to put out this baller content that they've been able to. So that means that either they're just not going to put out anything, or they have some things that they had to delay. So they're saying that the lack of subscriber growth was because of the lack of content. I don't really think lack of content is what's going to shave off 2 million projected. Personally, I just think that they are starting to cap out on the amount of people that they can join. And I think that expectations, because of how good it was in the past year because of the Rona and more people joining, I think that the forecast was just way too high. So I think it's a mix of the forecast was way too high due to projecting numbers to stay how they were last year during a global, P word, I can't say that word on YouTube. And on top of that too, I think it's just that they're kind of maxing out the amount of people that they can have join every single quarter, which 4 million, is still a lot. But also there's more competition. That's something else we got to talk about when we talk about Disney Plus and Disney next week, but there's just more competition. So Netflix said it has continued to hold itself up against the bevy of competitors, including Disney, Hulu, which is a Disney product, AT&T's HBO Max, Apple TV, Amazon Prime, Comcast, Peacock, which is another one that's getting really big. Discovery Channel came out with their own in December that's been huge. So they have a ton of competition now. Netflix originally was the one and only major streaming service. Now they're fighting with a bunch of other people. We don't believe competitive intensity materially changed in the quarter or was a material factor in the variance, as over forecast was across all of our regions, according to the report. I think that that's not true. I think that with all of these other, companies, it's definitely slowing their growth for sure. Because something you have to realize, right? Let's look at Netflix a couple of years ago, maybe 6 years ago. Not only were they creating Netflix originals, which really is all Netflix has right now is Netflix originals, and they're pretty damn good. But on top of that, you have all of the content that now these streaming services were basically leasing out to Netflix and allowing them to stream, such as Friends, such as The Office, such as all of these different shows that were a part of now other streaming content. So think of how many Disney shows, how many Disney movies, how many Disney related things that were on Netflix 4, 5, 6, 7 years ago that aren't on there anymore, because now it's Disney's property, which it always has been, but now Disney is only going to allow you to view the Disney products on the Disney Plus channel. It just makes sense. So now, not only do they have to continue to be competitive as far as pricing is considered, but they're also going to have to continue to try to be competitive with the content that they're creating, because not only are they losing market share, but they're losing content, because all of these different companies that own the rights to these shows and movies are now putting it on their own streaming service platforms. So Netflix has to make up for it, and they have to create more and more content, which doesn't seem like they're doing, and they even stated it themselves in this earnings report that they have not been doing it to the extent that they want to because of the Rona. So Netflix also anticipates its content to pick back up later in the year following production delays due to the Rona. As we've noted previously, the production delays from Rona will lead to a 2021 slate that is more heavily second half weighted with a large number of returning franchises. So essentially they're saying that they're kind of backloading the rest of the year with a ton of content, because they were able to shoot at the end of 2020, at the beginning of 2021, and that content will be out later on. As the company said that the production is back up and running in nearly all of its major markets, if it continues, Netflix said it expects to spend more than $17 billion in cash on content this year alone. Something I've always said about Netflix that I do not like is while Netflix originals is great, Netflix spends so much money on creating content, and that it will end up killing them unless they just spend less money on creating content or they jack the price of the service up astronomically, which I wouldn't be surprised. The company's revenue still grew 24% year over year and was in line with its beginning of the quarter forecast. Netflix said it also delivered a strong beat on its earnings compared to street estimates. Netflix also approves a buyback program to repurchase up to $55 billion in common stock beginning in 2021 with no fixed expiration date, and it's expected to begin the quarter, the company said. So stock buybacks are always great. You know, if a company is willing to buy back their stock, they believe that the stock is underpriced in the short term. Now, looking at a PE ratio of Netflix, the way to find a PE ratio, remember with tech, everything is overpriced right now. And in general, we don't live in the old Warren Buffett, Charlie Munger, Benjamin Graham times where PE ratios of 20 and 25 were suitable. We live in this new tech over astronomical valuation time frame. But all you would have to do is take $549, which is what Netflix was before this dump, $549 divided by $3.75 EPS, and you're going to get 146 PE, which is ridiculously insane. And I did the math. In order to get a PE of around 30, you would need a $125 price target for Netflix, which I don't think is going to happen. So in the short term, would I be buying Netflix as a long-term investment around $480? No, I personally wouldn't. Now, there's a couple of biases here. Number one, I think competition is way too heavy right now. Number two, I don't like that they're losing market share to that, but it's also that they're blowing so much money creating their own content, which is great. But as these prices continue to go up and up and up and up and up across all of these different platforms, at this point right now, if you have Disney Plus package, so Disney Plus, you have Disney Kids, and you have ESPN, plus you have Netflix, plus maybe you pay for Peacock or something like that, you're probably spending $40-50 a month on streaming services alone, plus $50 to $100 a month on your internet to facilitate all of those things. So at this point, the whole cutting the cord aspect is gone. You're probably paying as much now as you were paying for cable to get all of these things. And the other thing on top of that is if you're paying for Netflix and paying for these other things, you don't even have sports. So you're gonna have to pay for something like YouTube TV or something where you can still view sports if you're somebody who watches sports. So for me, I think competitive pricing and all these other competitive companies are definitely going to take market share from Netflix. It's just a part of it. So because of that, I would not be buying Netflix. If Netflix were to fall back down to $360, I would be buying Netflix. But for me personally, I do not like Netflix long term. I don't think Netflix will be around in 20 years. I really don't. I could be completely wrong. You guys can throw me some hate in the comments if you want, but I don't think Netflix will be around in 20 years. And it's not something that I would invest in right now unless it was at an extremely attractive valuation, around $300. Short term though, however, looking at it from a trading standpoint, we bounced off of 480 very well, which is, a really big support. That lines up with the 50% Fibonacci at 477. So I would expect to bounce. Maybe we can see a move back up to 500. But I do think that even if we continue to sell off, we will hold that $480 support. Guys, thank you for all the support. Hit the like button, subscribe. If you want to be a part of my private academy, get access to every single trade I take live as soon as I take it. Live stream with me and my team every single morning for the first hour of market open. Get access to our 60-hour course library, 100% for free. No ifs, ands, or buts, and no bull crap. I can't say the S word. Then go and hit the link down below. Thank you guys for all the support. Happy 420. Blaze it up. I'll see you guys. Peace.